Welcome, everybody. My name is Wendell Bedell, host of today's episode 3, Pricing Your Repair Services to Make a Fair Profit. Hey, let's face it, the main reason you went into business selling repair and replacement services to customers was to make a fair profit. If you were giving away your services for less than what it cost you or simply breaking even, you'd be operating a non-profit organization or a business that is likely to fail. And speaking of failure, did you know that most residential HVAC contractors have operating net profit before taxes of only 2.3%? What this means is that 97.7% of all residential HVAC contractors have poor profitability. However, based on the risk we take touching other people's property and their indoor environments means our type of business deserves between 12 and 30%. So what is causing poor profitability? Studies we've conducted find that poor profitability is directly linked to these business processes. And I'm going to discuss them in the order of the highest impact of profitability to the least. The first is underpricing, being used as a primary closing mechanism for your work. The second is poor or no lead generation. The third is a lack of service product brand differentiation. And fourth, the lack of value-added selling processes. The fifth, there's an absence of defined operating and work delivery processes. Six, there's an improper payment and liability protection terms and conditions. Seventh, there's a lack of labor management controls. Eighth, there's a lack of year-round labor recruiting and retention strategies. And ninth, there's a failure to organize the business for growth. The 10th is a failure to organize the business customer care function. And the 11th is a failure to forecasting, staffing, and expense budgets. The 12th is poor recruiting and retention of the top performers. The 13th is a lack of financial management skills and business mix tracking software. And there's a lack of leadership, training, and education. So let's get at it. In this episode, we'll be focusing on the number one cause of poor profitability, underpricing being used as a primary closing mechanism for your repair work. 98% of all contractors underprice their repair services. What they fail to understand is that when a customer pays you to do a repair or a job, especially a custom job, they are paying not only for the material and the work to be completed, they also are paying for your knowledge, your experience, your custom skills, your tools, the time to plan, your time to prepare, your professionalism, your work ethic, your excellence, your discipline, your commitment, your integrity, your taxes recovery, your licenses, your sacrifices, your liabilities and insurance, and your vehicle and maintenance cost. To prevent underpricing, residential HVAC contractors need to know what they're worth and be confident in it. So let's get an understanding of how upfront flat rate repair service price is structured. Each flat rate repair price item is financially the same as a complete quoted job, to include the total cost of goods sold, such as the skilled labor cost for travel to the job site, diagnose the problem issues, quote the price, and make the repair. The parts and material cost to complete the repair, the labor and material repair cost for the warranty coverage cost, the company or service department overhead recovery cost, and it includes the desired fair gross profit margin amount before the service agreement discount option. Service tickets should be logically itemized and self-explanatory to the customer, whether using a hard copy invoice or a handheld device. Like our fixed right HVAC repair guides, it should be consumer logical and in self-explanatory order designed to help the technician avoid having to explain each repair line item or getting into techie talk with the customers. To include diagnostic service charge, repair fee or fees, recommission and safety test per the manufacturer startup instructions, and include a service agreement discount option for a service agreement per either a monthly or annual priced option. As a shameless promo, you can subscribe to the Fixed Right Repair Upfront Price Guide with 99.9% of all the common repairs simply by going to the Appendix A section of the A to Z book on residential HVAC business, or go to growmyhvac.com. So let's now discuss how to determine your upfront repair price guide technician's hourly rate. When you set up your hourly rate, you want to be able to hire the best available so you can maximize your company's service opportunities. Using a rate lower than the cost of what it would cost you to hire a new hire would require you to adjust your price guide. And if you didn't, you would lose money on every call. So let's together calculate using the same calculators found on page 25 of the A to Z book on residential HVAC business to derive your unique company and local area technician hourly pricing rate for your upfront flat rate price guide. So let's say a journeyman level technician cost without benefits is $30 an hour. And the benefits package like Obamacare is around 24% of the technician's cost per hour. That adjusts the hourly rate up to a $37.20. So that's $30 an hour times 1.24 to come up with $37.20. And the total hours we pay a technician a year is 2,080. And from that, we have to deduct 80 hours for 10 days paid vacation. We also want to deduct another 56 hours for 8 days holiday pay. And we deduct another 48 hours for 5 sick days. That leaves us with 1,976 available hours. Now, the national average technician billable efficiency, that means on-site, doing work on a repair, is only 45% billable, or only 3.6 hours on-site billable a day, going from January 1st to December 31st. This is due to travel time to jobs and non-billable hours during slow work periods. That leaves only 889 hours of on-site billable. That gives us an $87 an hour break-even technician rate. Now, to be sustainable and keep your people employed, we simply take the 2,080 paid hours a year and divide that by the 889 billable hours a year to come up with a break-even cost adjustment of 2.34. That 2.34 will be used to multiply by the hourly rate. To find our break-even labor cost per hour, we then multiply the $37.20 hourly cost rate. That's the $30 an hour plus bennies by the 2.34 adjustment to equal $87 an hour break even. So when I'm on site, I need $87 an hour just to break even. So what this means is that the $87 an hour rate is needed to recover the 55% of the technician's off-site travel and non-billable labor hours. So next, we need to calculate the break-even hourly truck cost in order to recover the vehicle cost within the on-site billable hour. So let's say each of our vehicles drives about 30,000 miles a year, and we get only 18 miles to the gallon. And the cost of gas is $3 per gallon. So taking the 30,000 miles per year and dividing it by 18 miles per gallon equals 1,667 gallons per year per vehicle. And multiplying the 1,667 gallons times the $3 a gallon equals $5,000 a year. Let's also say his annual per service vehicle maintenance cost is $1,500 per vehicle, and his mortgage or lease is $7,800 a year. So the total annual vehicle cost is $5,000 for fuel, plus $1,500 for maintenance, plus $7,800 mortgage or lease costs $14,300 a year. And the vehicle variable cost is 48 cents per mile. His purchase cost for the service vehicle is $34,500, and the salvage value at the end of the period that he uses them is only $2,500. He keeps his vehicles in service for about 4 years. His annual depreciation then is calculated by taking the purchase price of $34,500 less the $2,500 salvage and divide the rest by 4 to come up with $8,000 depreciation annually. So the total annual operating and depreciation cost is $14,300 operating costs plus the $8,000 depreciation to come up with $22,300 per year. The vehicle break-even billable cost is $22,300. You divide that by 889 hours of billable hours comes up to $25.08 per hour that I need on site per hour to recover the vehicle costs. The total break-even labor and vehicle cost per hour is $87 for the labor hour, and $25.08 for the vehicle comes up to $112.08 per labor hour cost rate to be used in your upfront price guide. Now, if the target gross profit margin is to recover the 35% overhead and 20% net profit before taxes, and prior to any kind of a service agreement discount, we then need to take the $112, which is the break-even cost per hour, and divide it by 1 minus 0.55, or the reciprocal of the gross profit margin, to equal the technician hourly sell rate of $249 an hour. So in this example, the contractor requires $249 per on-site billable hour. Now, the customers do not see this hourly rate since each itemized repair price ranges from a fraction of an hour to complete to multiple hours to complete, as well as adding the repair parts with associated parts markup. Ideally, the diagnostic service charges should be around 1/2 of your $249 rate. However, most use up to about $99, keeping it below 100, and make up the difference using a half-hour truck restocking fee. So let's now discuss how to determine your repair warranty reserve parts markup rates. Keep in mind that a repair warranty reserve is a customer protection against unforeseen labor and material defects. Some repairs fail during the warranty period. We use a markup on the parts after local sales tax costs to cover the repair callbacks. Now, the markup on parts help you recover enough above the cost of the parts to cover potential callbacks, labor, material warranty support costs. There are 6 recommended markup levels for parts based on the cost times a warranty multiplier. Also, low-cost parts require a higher warranty reserve markup on the cost to protect you from callback costs coming out of your retained earnings. Now, the recommended warranty reserve markup levels, parts that are between $0 and $9.99, you multiply times 5. Some contractors multiply times 6. Parts markup between $10 and $49.99 is times 4. Parts markup on $50 to $99.99 is times 3. Markup on $100 to $199.99 is times 2, and between $200 and $499.99 is 1.7, and $499.99 and above, you multiply 1.5. Now, keep in mind, even warranty repairs, when you go out and do a warranty repair, they require a warranty reserve markup to cover any callbacks for failure on those. When calculating warranty reserve on warranty calls, you should mark up the parts as if it was in your part using a typical warranty markup, then remove the actual cost of the part from the final price, because you get that recovered at the supply house. So now let's illustrate an example: fan motor and a cap repair ticket upfront pricing with a service agreement sign-up discount option. So a diagnostic service charge is 0.5 hours times the $249 an hour would be $124.50. But due to the local area market pressures, it's reduced to $89 by this contractor. The run capacitor for the motor and a cap replacement is a half hour to replace the cap, and times the $249 an hour, and $15.32 for the parts cost times 4. So the run cap is $185.78. The universal fan replacement price is 1 hour to replace the motor times the $249 plus the $110.12 for the parts marked up times 2 equals $469.24. And then you have a recommission and safety test to start it up for the manufacturer's guidelines, and that's 45 minutes, or 0.75 hours times the $249. That comes up to $186.75. So the total repair price to the customer is $89 plus $185.78 for the cap, plus $469.24 for the motor, plus $186.75 for the recommission and safety test, for a total of $930.77. Now, offering a service agreement discount of 15%, so that's the $930.77 times 15, you'd be taking $139.62 off this repair for the customer to sign up for one of your monthly or annual service agreement contracts. Now, the 15% discount, along with a monthly service agreement option, is proven effective to close 85% of all non-service agreement repair customers to a service agreement. In fact, when it gets up higher, when it gets close to $100, the conversion rate gets nearly 100%. Our client contractors find that the higher the repair ticket price, the higher the discount, resulting in a higher repair to service agreement conversion close rate. Now, in this next episode, pricing your service agreements to make a fair profit, we're going to be covering the benefits of a residential HVAC service agreement. The next topic would be the need for service agreement business delivery processes. And the third is the service agreement scope and pricing structure. And then we're going to determine your annual and monthly service agreement pricing rate. Hey, it's your future. Act today. If you haven't done so already, please click the HVAC Pro Podcast subscribe link, as well as order the companion ebook, A to Z Book on Residential HVAC Business, via the 2 links in the podcast description. And again, we thank you for tuning in, and I look forward to having you in our next episode.